We are excited to have Dr. Ernie Goss with us today, widely known as Mid-America's economist of choice. Dr. Goss is known for making economics understandable to people of all walks of life, but especially business executives, community leaders, and policymakers. He is a professor of economics at Creighton University, where he is chairman of regional economics at the School of Business. And today, he will be making his second appearance at our partners meeting. We will have time for questions after Dr. Goss completes his presentation. So please use the chat box and send us questions. So back by popular demand to the virtual Northwest Iowa Development Annual Meeting, Dr. Ernie Goss.
Thank you, Larry, and thanks to the Northwest Iowa Development Board for bringing me back, and especially thanks to Steve Simons and his team. And here you see my opening slide, COVID-19, the Iowa and regional economy, a rebound in 2020. Well, needless to say, I would change that to it's rebounding. It's not, we're certainly not to a rebound just yet, and I'll talk more about that in my coming slides. But let's, I think.
Can you share your screen? I'm sorry, it's not showing.
It should be sharing.
Hope it's not.
Oh, okay. Sorry. That one should share. How's that?
There you are.
Okay.
Thank you.
Wow. Okay, let me start again here. Okay, apologize for that. Slideshow. Okay. Okay. Is that there?
Very good. Thanks, Ernie.
Okay, sorry about that. Again, I think one thing that's come up, and I think it's very clear, the empirical evidence globally says that lockdowns, economic lockdowns do not work, have not worked, will not work. And I turn to Sweden to show us how it should have been done by all of us. Now, it's easy to see in retrospect. They did not lock down, and now they did have much higher rates of death and infections early on, but now they're moving down the list as the rest of us move higher on the list, and that would be, of course, Spain and the rest of Europe, France and Great Britain and other nations there. But anyway, let me turn this first slide. And here's one of the reasons I'm saying that I think we overreacted, and I guess it's better to overreact than to underreact. But here you see COVID-19 hospitalizations as a percent of state hospital capacity, and this is just last week. Okay, you see Iowa there at about 3% of hospital capacity. The hospitalizations as a percent of COVID capacities. We're nowhere close to being overrunning our hospitals with COVID-19 capacity, with COVID-19 infection, sorry for that. And at my university and other universities in Iowa, Iowa State, Iowa, Northern Iowa, and others, you see that the infection rates are much higher, of course, among younger individuals, men and women, but the infections have less of an impact. The impacts tend to be, of course, on those who are older, and we're seeing that dramatically. So I think the evidence shows clearly that we need to keep the economy open, and what we need to do, of course, is to protect those who are at higher risk, those with comorbidities. And you see that Iowa ranks 24th best in the nation in terms of available capacity, hospital capacity for COVID-19 infections. And Nebraska is ranked 21st. Now, the reason I put Nebraska in there is just simply because Nebraska, of Iowa's neighbors, Nebraska comes the closest to being like Iowa. Now, Iowa's more densely populated than Nebraska, and thus one could argue that the infection rates in Iowa have been somewhat higher than Nebraska. Let me turn to my next slide here. And here are the uninsured unemployment rate. Now, this is the most contemporaneous, if you're looking for contemporaneous economic indicators, this comes out every Thursday, of course. This will be out tomorrow. And this is an insured unemployment rate. And you see there the U.S., and that spiked, hit in May, and you see Nebraska's hit a peak at 7.9. You see here before the low rates of uninsured unemployment, and you see now I'm going to show you Iowa's. Iowa was spiked up there, higher than Nebraska, but lower than the U.S. You see now the current insured unemployment rate, and we're now turning. Look at tomorrow. I expect the first-time claims tomorrow to come in at approximately, say, 800,000 new insured unemployment, those on initial claims for unemployment insurance. And Iowa's will be down as well from the previous week. I expect that. And we're moving in the right direction. So if you wanted a term, an economic term, say the negatives are getting less negative. And I can say that pretty emphatically. That's true in Iowa. It's true in the U.S. It's true in this part of the nation. Now let me turn to this slide. Look at the job losses. The first January through April, Iowa at 12%. That's non-farm jobs. In Nebraska, about 9%. U.S. at almost 15%, 14.5%. Here you see since April to August, the latest numbers we got. Now, I'd like to warn you about these employment numbers that come out from the U.S. Bureau of Labor Statistics. Unlike those numbers I just showed you in the previous slide, this comes from a sample, not a population. So there's a confidence interval. So these are the midpoints. This is the best number we can get on the employment number, but keep in mind this is from a sample, and I would argue in some cases not a very good sample. So look at that. Iowa's gained 7% back, 4.8% for Nebraska, and the U.S. there is about 8%. It's covered up on mine, but I think it's about 8%. Now here the yellow indicates the overall losses right now. So Iowa's about almost 6% down from pre-COVID levels, and then you've got Nebraska at 4.5, and the U.S. at 7.4. And I think that we could just say that Iowa and Nebraska and this part of the country is looking much better than the rest of the nation, so we can take all those small comfort in that. And here, if you look at job losses this year, and let's look at industries. Now, leisure and hospitality. Let me tell you about a major conference hotel I visited here in Omaha. I talked to the manager there, and their food staff, their food service division went from 250 employees to 4. 250 to 4. That's what we're seeing. This industry is taking a hit. Leisure and hospitality there you see in Nebraska and Iowa, both still well down. We're not even close to getting those jobs back. Government, likewise, we're seeing 10 to 7% job losses. And you see an information there, education and health. Nebraska's, that number is a little bit positive. Iowa's still well negative at 4%. Transportation, negative. Of course, that includes shipping, and this is an important industry for Iowa, important industry for Nebraska, still well down there. Wholesale trade, we're seeing in Nebraska, a positive number, still down for Iowa, a very important industry for Iowa. And for example, in the Cedar Rapids area, a very big area for retail, for wholesaling and for warehousing. Retail trade. Now this is where we're seeing some real issues, and in Larry's slides, you had that buy local. We can't emphasize that enough. We economists buy local. I know it's real convenient. My family loves to get on and get it the next day. They say, well, hey, I got it the next day from Amazon. And I just turn and say, well, I got it this afternoon. I drove out to the mall and bought it and got it the same afternoon. I think we've gotten to the point where we're just, it's not healthy for our economy, and we need to turn, I would say, to our local merchants. And I know it's good. I think we can go through Amazon, big box retailers, but let's try to buy local when possible. Professional business services down for both. Here's the one that we survey. I'll turn to these results. Manufacturing is still down 1%, but this one we're recapturing those jobs month by month. Since April, we hit a bottom in April, gained back every month since April. The manufacturing industry in Iowa and Nebraska and the region has been adding jobs. The U.S. numbers will come out tomorrow morning. Chicago ISM numbers came out this morning. It's gaining. Look at construction. Obviously, we're seeing a heck of a lot of construction out there. Now, we need to see even more. The residential housing, still an industry. It's not enough housing, not enough inventory out there. And of course, let me turn to our leading economic indicators. Like I said, here is the U.S. number. Notice this number 56. This number ranges between 0 and 100. 56 is above growth neutral. You see it hit a down here in April, and it's been increasing every month since. That's well into positive territory. Here you see the Mid-American, which includes Iowa and Nebraska. Now I'll just tell you, tomorrow morning, give you an early, we'll release our numbers tomorrow morning. It's up to 65 now, 65. The U.S. number is going to be up as well. The Chicago number, as I said, out this morning was up. Now here's rural Main Street. Now this is troubling for Nebraska, of course, troubling for Iowa, troubling for this part of the nation, still below growth neutral. This is from a survey of bank CEOs in rural areas of 10 states, including Iowa. The number's just not where we want it to be, below growth neutral, but it's moving upward again. We hit a record low here, and I'll talk about those numbers later on. And the conclusions now, conclusions, indicators to watch. I mean, we economists, I mean, this slide, I think when I talked to your group earlier, my opening slide was black swans and economic outlooks. And black swans, in other words, what is an economic factor, an economic metric that if it could turn very negative very quickly and have a big cost? Who could have ever foreseen or envisioned COVID-19? So absent that, the indicators to watch will keep you on top of that. The yield on the 10-year U.S. Treasury, and I hope you can see that, that's in small characters. Keep an eye on the 10-year yield and yield on the 10-year U.S. Treasury bond. The reason being it's a measure of risk. It's now at record low levels at 0.6 to 0.7%. Obviously, factor in inflation, that's not good, but investors are willing to take almost nothing to avoid risk, and government bonds are seen as low risk. I'm not quite sure I agree with that low risk, but anyway, keep an eye on that. First time claims for unemployment insurance comes out tomorrow morning. Again, if that number hopefully does not move back above 1 million, I'd like to see it in the 700 to 800 jobs, the 700 to 800,000 number. Employment report comes out this Friday. That number is going to be good. I think it's going to be between 200 and 300,000. If that number comes in bad meaning something below 100,000, it's going to be bad for the equity market, but good for the bond market. What's good for equities usually is bad for the bond, and vice versa. Now look at gold prices. Now gold prices today move below $1,900 an ounce. Gold prices, gold is a safe haven asset, just like the 10-year Treasury yield is a safe haven, or the 10-year Treasury bond is a safe haven asset. Keep an eye on gold. I'm investing in gold. I think you need to be in gold. I think at least some of your portfolio needs to be in gold, because we're going to see an upturn in inflation. We're going to see a downturn in risk, and I should say the risk will remain fairly significant, pushing up the price of gold. So that's at least I think part of your portfolio should be in that. Now the outlook. Federal Reserve will do what is essential to underpin debt and equity markets. Very important. If you haven't been watching, and why would you, watch a bunch of economists sit around a table and say what we're going to do with the dollar and what we're going to do with interest rates. They're committed to low interest rates. Now that means on the short end. On the long end, they'd like to be committed to low long-term rates, but those rates could move up, and I expect long-term rates to move up. Short-term rates will be low for well into 2021 and maybe for the entire year. In fact, some of the members of the Open Market Committee are saying low short-term interest rates until 2023. I don't agree with that. I think they'll raise rates before then, but there are some members of that committee that say 2023. Upturning municipal bond defaults. The U.S. Congress can't seem to get their act together right now, and for my money, that's a good thing. It's better to have no stimulus package than a bad one. The Democrats want to throw in a lot of funds, more than I think is essential, $2 to $3 trillion. That's too large. We've got some issues there with our debt, and also it's bailing out some of those state and local governments that have overspent. And I think we're not going to that's not going to be part of the stimulus package, I hope. So we'll see an upturn in municipal bond defaults. Short-term interest rates, as I said, will remain near record lows into 2021 and perhaps all of 2021. U.S. federal debt will continue to expand to 130 to 150%. And the question is often asked, well, when does it matter? When will it begin to matter? And as Herb Stein, the famous economist who was the chief economist in the Eisenhower administration, said, we won't know until we know. In other words, it's just a fire that's sitting there. The embers are burning. We don't know when it's going to flame up, just like we didn't know what was going to happen last night in that dumpster fire we all saw last night. Who could have predicted that one? Not me. Okay, but that debt will begin to matter, and how will it be manifested? Keep an eye on the 10-year Treasury bond. That first number I ask you to keep an eye on, that yield. When that begins to matter, that yield will begin to rise. Now, as I said, it's at record lows, so it's certainly not mattering right now. And here we have what's called modern monetary theory. It is not a theory. It is something that AOC is what she's part of that, those that back. We'll just print more money. Just print it, borrow, spend, because it doesn't seem to matter, and she's been right. She has been right. She will be right until she's wrong, and she will be wrong soon, I think. In other words, the debt will matter. Modern monetary theory is nothing more than political. It's not economic, it's political. The Nike swoosh rebound, we're not going to get back all of our jobs lost until well into 2021. So instead of a V-shaped recovery that the president has talked about, it's going to be more of a Nike swoosh, a gradual rebound. Now, it's been pretty gradual is probably not the right word for it. It's been very solid so far. And folks will criticize it saying, well, hey, the rebound it's slowing down. Of course it's slowing down. When you start draining the pond of fish, it's much harder to get a fish. Same way here. And what we're seeing in our survey is some of the companies that we're surveying say it's 40% of the manufacturers say finding and hiring qualified workers is one of their biggest problems. So the fact is that it's very difficult to grow when you can't get the fuel to grow. Inflation turns upward in the second half of 2021. I think there's, in my judgment, now I'm one of the few that says we're going to see it. I just think there's too many. When you start spending the level that we've spent, when you're talking about running deficits of $3 to $4 and now on to $5 trillion, you see competition for those limited dollars, and that drives up interest rates, and it drives up inflation in advance of the interest rates. Risk premiums will remain high, which means, as I said, back to gold prices, risk premiums, so you move to those safe havens. But despite the movement toward the safe haven of treasury bonds, I still expect inflation to push those yields on the long-term treasury bonds. Long-term, not short-term. Tough sledding for ethanol. 40% of our bankers with plants in their area reported temporary closures. Of course, Iowa's the #1 ethanol producer. Oil prices look like they're going to remain in the $40 to $50 range. That's not supportive of ethanol. And of course, we've got exemptions for the petroleum industry, and the Trump administration's promised to stop those. We'll see. Sports betting. Here's a project I'm working on right now, looking at sports betting in Iowa. Sports betting, to my surprise, has increased overall casino revenues. In other words, the table and slot revenues have been enhanced, or the sports betting, those who come into the casino to do sports betting, even those who are doing mobile sports betting, have increased the AGR, the adjusted gross revenue coming from casinos. We will see that continue to support casino revenues. And of course, that's, you've got 18 of 19 casinos, commercial casinos in Iowa with sports betting. And you're talking about less federal support for agriculture. Currently, we're getting 1/3 of net farm income is coming from the federal government. That's not where we want to be. And once the election's over, that's not where we will be. There will be obviously less support next year. Hopefully, we'll get what we need. What we need is exports. We need a global turnaround, a global economic turnaround, but we need trade deals. We need trade deals. Trade is so essential to the Iowa economy. And as you saw in some of Larry's slides, talking about trade, very important. So with that, I'll turn to questions. I think I've finished in perhaps record time, but in fact, if there are any questions, I'm going to tell a story about probabilities. So with that, any questions there from the audience?
Yeah, Ernie, I had a couple come in here.
Okay.
Let me start with the first one.
I can hardly hear you though.
Can you hear me better now?
I'll turn up my volume. Okay, how's that?
Do you think what has happened related to COVID-19 and urban unrest will create opportunities for business development and growth in rural Iowa?
No doubt about it. I mean, for every time we have this significant turmoil, it creates opportunities for rural areas, particularly, I should say, for rural areas in this case, because now you can run businesses. We have a place in rural the mountains of North Georgia and Alabama, and I did my class from there just last week. In other words, remotely. But that's just what we're seeing is these rural communities, the ability, and we need the infrastructure. For example, telemedicine. The last visit I had to my doctor was online. For my money, that's a great deal. Now, we can't do my prostate exam online. At least we have not been able to get that just yet, and I would not want that one. But nonetheless, and forgive me for that, but yeah, telemedicine. We're seeing education. Education is prime example. Government. Getting your license plates, getting services online, property tax collections, all those things, very important. And we're talking about there are some real opportunities out there, especially for those communities with 5G capabilities. And we'll wait and see. One of the communities I'm working with provides telephone services for the hearing impaired. This is from Aurora, Nebraska, providing it all over the U.S. A great opportunity for rural areas, because now we can live where we want to live, not where we formerly had to live, close to and being in our employer. So that's going to be certainly an opportunity for those communities out there, and I think it's going to be a great opportunity. Now, of course, it's not without cost. There are and the retailers in the rural areas have been hit hard. The restaurants in the rural areas have been hit hard. So we need to get out there and get and go to the restaurants and eat in the restaurants, and again go to our local retailers and purchase. That would be the best thing we can do for them. But going forward, that is going to be an opportunity for the rural areas.
Second question that came in. There is a lot of talk about supply chains, reshoring, and disruption within U.S. companies. What do you think that impact will be in our area?
The supply chain, that survey that I showed you in one of my slides, that is from supply chain managers. Okay, so they're looking, and what we're seeing is real disruptions, particularly in international supply chains, and movement, say, from a supply chain focused in China to a supply chain focused in Vietnam, South Vietnam, Vietnam. And that's the supply chain managers are telling us there have been some significant impacts. And what we're seeing right now, and it's not, I haven't seen it reported, is we've got transportation bottlenecks. Right now, our supply managers, manufacturing supply managers are telling us it's taking longer and longer to get those raw materials and supplies into their company, and it's taking longer and longer to get those products out. So we need to, there are some opportunities right there in terms of shipping, in terms of transportation. And back to the rural areas in terms of opportunities, we need to see transportation expanded, transportation opportunities in rural areas. I'm concerned that some of the airports in the urban areas near, say, northwest Iowa, that will be closed, and we're already seeing fewer and fewer flights. That's an issue. That's a negative issue, and we have to address that. We have to do something to support those the transportation venues in the areas near rural areas.
Okay, looking at time, I think this will be our last question before we wrap up with Ernie. Could you elaborate on your opinion that the growth curve coming out of COVID-19 will look like a Nike swoosh?
Yeah, it's just there's just too many jobs lost in leisure and hospitality, and we're just not getting them back. So that's going to restrain overall growth. Leisure and hospitality. If you fly, and I've flown a good bit lately, and I fly Delta, and Delta has the gratefully the policy of keeping the middle seat empty. Well, and they're cutting their flights. So we've got to see more. That's the leisure and hospitality and transportation linked to it are going to restrain overall growth. Manufacturing is going to be back. Manufacturing is not on a Nike swoosh. The manufacturing industry is on a V-shaped recovery, but when you put it all together and you include government in there, state and local government, those industries right there, transportation linked to leisure and hospitality, and then state and local government, you put those in with some of the transportation linked to that, and you're going to see a Nike swoosh. And unfortunately, we're just not going to see a return to pre-COVID levels until probably the second half of 2021. That's true for Iowa. That's true for this part of the country. And I could, let me tell a little, if I can do a brief story, and this is very risky to do. I've never tried to tell something funny.
Watch out, we're recording this.
What's that?
You'll have to watch out, we're recording it, so we'll play it back for you.
Okay. Oh, well, it's when I was in the military. When I was in the military, I took my flight training in Norfolk, Virginia, and my parents took me down to Atlanta. I grew up in North Georgia, and they took me to Atlanta to catch the train to Norfolk. Well, the train it ended up in Portsmouth, separated by a tunnel. I had to get, and so I'm sitting there, a young guy, trying to figure out how am I going to get over to Norfolk to get that to my aircrew training. And so there was a guy there, and he said, "Hey, I'll take you." And I was in a fast food place, and he said, "Okay, I'll take." I said, "Okay, I'll ride with you." So I got into this car. We were going under the tunnel between Portsmouth and Norfolk, and I'm a wise guy, still am a little bit. I was a wise guy, and still am a little bit. And I said, "Well, how do you know that I'm not a serial killer?" He said, "You know what the probabilities are of 2 serial killers being in this car at this place at this time?" And I thought, "Oh, okay, gotcha." So everything that I've told you, everything I've put in these slides, there's a probability associated with it. And the probabilities can be disrupted by something like the continuation of COVID-19. I think we will get a vaccine, and by golly, that's the most important thing we can ever have to make sure that's a Nike swoosh rebound. We have to have a vaccine. So with that, thank you, and I'm so happy to be with you. And there you see, if you want to get my newsletter, it's free and well worth the price. It's to go to gossandassociates.com, and thank you so much for having me, and I really appreciate being with you.
Thank you, Dr. Goss. I would like again to thank our sponsors, Mid-America Energy, who sponsored our speaker today, and Alliant Energy, who has sponsored our 2020 Northwest Iowa Development's 2020 annual report. Thank you all who have joined us today. We look forward to getting together in person at our 11th annual partners meeting next year in Hawarden. Please have a great rest of your day.